Ladies and gentlemen, my name is Greg Michaelowski from ForexLive.com. This is going to be a technical look at the euro versus US dollar, sort of a preview of the key technical levels that I'm going to be paying attention to through the non-farm payroll report tomorrow. Now, for those people who know me, I don't like to gamble through the non-farm payroll report. It's a, who really knows what the number is going to come out? Is it going to come out at 38? Is it going to come out at 238? We don't know. Last month, it was a big, huge surprise to the downside. This month, they're expecting 180,000 rebound back to the upside with the unemployment rate ticking up to 4.8% from 4.7%. How does the mix come out? I don't know. Are we going to get another weak number? Are we going to get a stronger number? We don't know. So what I look to do is outline key technical levels that if the market should get to and through, that would be more bullish, or that would be more bearish if we go to the downside. And that comes off of the data. So if they're expecting 180,000, if we get another number that's going to be around 100,000 or thereabouts, that's going to be considered weak again. And as long as there's no big revisions to the prior month, and we're going to see the dollar move back lower probably, and if that should happen, then I would expect that we should see the price move above some certain levels. The first key level that I'm going to be paying attention to is this area right through here. This area has been tested over the last few days, really yesterday afternoon and then earlier today, or through the beginning part of the day, represented by a lot of moving averages, including the 200-hour moving average. It's a green line in the chart. There's this green line. This is an overlay of the 200-day moving average. That level comes in at 110.95. And then we have the 100-hour moving average, which really was a ceiling both yesterday and again today. Today, that level comes in around 110.06 or 05 or type level. It's moving a little bit to the downside here, so it might be a little bit lower by the time we get to the employment report tomorrow. And so, though this area right here is going to be our level of resistance, or at least first level of resistance, move above that level, and we'll look for the market to stay above that level. So have your finger on the ready to trade if the price goes above that, maybe comes down, corrects to that level, and you think that number is weak. Okay, if the number comes out 150,000, then I wouldn't do anything. I wouldn't. It might be weaker than the expectations, but we can see the euro move to the upside. We can see the euro move to the downside. Euro versus US dollar, that is, off of that type of number. So it has to be a weak number that's going to really get the dollar selling to the downside. And so look for 100,000, 110,000, maybe below 100,000 to get the price above that level and start to kick in for further buying. Now we may gap even further above that level, in which case we're going to be looking for this 50% retracement level. This 50% retracement is of the Brexit move to the downside here. This is our Brexit high, this is our Brexit low. And the midpoint comes in at 111.68. And if you go back on time and look at the post-Brexit time period here, we did move above it here. We moved above it here for 2 bars, no closes above that level, just quick corrective moves to the upside and then move down, another move to the upside, another move down, another move to the upside, another move down. Obviously, the market was moving at pretty fast pace through here, or above average, as liquidity conditions and event risk weighed on the market. And so that was then. And then in trading this week, on Tuesday, as a matter of fact, the market moved above that 50% retracement level at the 1168 level, moved up to a high price at around the 1185, 86 level, and started to rotate back to the downside again, coming up just short of this 88 high that we saw on the day of the Brexit. And then the thing after, or the high after this high right here, this failed breakup here, came in right against that 50% retracement, kind of like we did here. And so the market's paying attention to that 50% retracement level. Do you believe it? I do. And so if the market should get above this area right here and then head up to the 50% retracement, which would be our next target, we would look for either resistance against that level or a break above that level. And if we break above that level, what haven't we seen above the 50% retracement level? A close above that level. So we look for a close above that level. And if we get that, then we're starting to move up toward the 100-day moving average, toward the 61.8% retracement of this move to the downside. Those would be the major levels that I would look for the market to get to and through. Okay, to and through. And if you get to and through, you want to stay above those levels. If you go above and you start coming back down, we could see that reversal. It's all going to depend on the number and what comes out. So we got to play it by ear and play it by our expectations of the number. Now, if the number comes out stronger than expectations, if we get that 170, 180, maybe even 200,000 job gains, remember, it was all through last year that the market averaged over 200,000 job gains, and so it wasn't that long ago that we had those types of numbers. And so if we get a 200,000 number, we could see this euro versus US dollar tank, and the tank would take us through these low prices here near the 110, I don't know, 23 to 27 level is where our swing lows came in on this day right here. That was a low, one of the lows last week, if not the low last week. And then we had this low right here that we saw in trading yesterday, and quick rebound to the top side we took. And so we need to get below that level, and that becomes sort of this level on the downside. If we get below that level, we should see further selling down to our post-Brexit lows right here. These lows came in at the 109.69 level, and then we have our Brexit low at 109.10. Move below that level would be further momentum to the downside for the pair. That's this low right here. It also goes below the 61.8. I'm on the daily chart here of this move to the upside, so that low comes in at 109.37. So we have the 109.69.70 level. We have the 109.37, and then we have this low that comes in at 109.09. Let's call it 109.10 on the downside, and then we start to look toward this 107.77, 108.33 level. And I'm going to show you where this, why this is important. Well, we had a bunch of swing lows here. Swing low here, sharp move higher, swing low, sharp higher, swing low, bigger move higher, break below that level, and then we use that level as resistance right here. And then we move back above it, and we start to use this yellow area as support. Yes, we went below it right here, but only for one day, closed below that level. The next day, we moved up to it, and then through that level, and then we start to use that old low or this low area as a resistance or support level in the market moved higher. So lots of different swing lows and even swing highs around this level. So that area between the 107.77, 108.33 is going to be a key level, not only through tomorrow, but going forward for this currency pair. So that's my sort of plan for the non-farm payroll for the euro versus US dollar. If you want to use it as your plan, I think it makes perfect sense for us as traders to share that idea. And these are levels that I think that not only I see, but other traders out there will see as well. So all of us can kind of lean against. Remember, we can't move the market one pip as retail traders. We have to rely on the market. And if the market sees what we see, that's always better news for you as a trader. My name is Greg Michalowski. I hope you enjoyed this. If you like this, give it a thumbs up. If you don't like it, give it a thumbs down, of course. And be sure to hit the subscribe button on our YouTube channel. We'd love to have you subscribe to our videos. Bye-bye now. Good fortune with your trading.